BRICs nation, Saudi Arabia, the Middle East, Russia, China, is winning the war against the West, against America, as the U.S. dollar hits $35 trillion worth of debt, the highest debt any fiat currency has ever taken on. We are en route for being dethroned as the most powerful global currency, and BRICS is doing whatever it takes to make that happen. The bottom line, they're tired of having a noose around their neck that America has the ability to pull at any moment. To be sanctioned by another country, America has the ability to sanction any country at any moment because of the greenback. Every purchase done overseas is done in the U.S. dollar. Starting back during Richard Kissinger, they made a deal with Saudi Arabia. Every time Saudi Arabia sold a barrel of oil, it was done in U.S. dollar, making our dollar the most widely used currency in the world. And because of that, we've been able to print as much money as we wanted, irregardless of its backing to gold or any precious metal. It was just purely printed money, and we could print as much money as we wanted. We're at $35 trillion worth of debt, and we still have the most powerful currency in the world. That's impossible. No one's been able to do something like that. The Roman Empire would have fell 1,000 times before they got to that level. It's just absolutely impossible what we've been able to accomplish. But the world uses our currency, and BRICS is bypassing our currency. So here's something you have to understand. How does this impact oil? In a major way. Every time India, for instance, they have the rupee, every time they trade their dollars for USD, it's 80-1. And so every time they buy a barrel of crude, the stronger the US dollar is, the more expensive a barrel of crude is, because they lose money on the exchange, then they buy the oil. And so BRICS has opened up the door to allow the Middle East to buy oil using their own currencies, bilateral trade. And that has opened up the door to bypass US dollar, making it cheaper for Middle Eastern countries to buy oil. Okay. And so I'm going to go over a few things here. I'm Sean Pruitt, president of Kingdom Exploration. If you like this channel, please subscribe. Right now, oil prices, WTI crude is trading at $79.42. Brent crude is $83 per a barrel. Oil prices are rallying once again. Okay. And so I'm going to go over some notes that are relevant that I've read a lot of news, and I've done a lot of research. And these are the strongest supporting news that I believe has the highest impact on the current environment that we're in. Tightening U.S. oil inventory, reduction in U.S. crude supplies data indicated a decrease of roughly 1.3 million barrels, according to the EIA, signaling a tightening U.S. oil market. Such reductions often send bullish signals to the market, resulting in increased oil prices. So the fact that U.S. crude supplies have dropped 1.3 million barrels means we are using more oil than we're producing, okay? Impact of sanctions on major producers. Russian sanctions, post-invasion sanctions on Russia, have directly affected its oil production capacities and exports. For instance, reduced capacity at Russian refineries due to Ukrainian strike, constrained supply, inadvertently pushing global prices higher. So Russian is not only being sanctioned, but they're also, Ukrainian drones are successfully going 200 miles deep into their country and destroying their refineries, destroying oil facilities, okay? Russia's getting hit very hard on every side. Strategic production adjustments by OPEC, curbing production in the next meeting for OPEC is June 1st. OPEC's strategic decisions to limit oil output influence global oil supply. For instance, Russia's production cuts agreed with OPEC led to tighter global supplies, providing upward pressure on prices. Surging demand in developing economies, okay? Asia's growing consumption increased oil imports by countries like China, which rose 5.5% in recent months. Showcases growing demand, which propels higher prices. Now, here's the deal. We are focused on American news, Western news. That's the only thing that matters. But here's the thing. America has grown at a tremendous rate, but that growth rate stopped. Our oil demand continues to grow at a very small level in comparison to other countries. And so these other countries' surge in demand is putting a huge demand and burden on oil. during a time when quote unquote, people are divesting from oil and negative towards oil, but oil demand yet grows. And everyone was thinking green energy is going to replace oil. The demand for oil is going to drop, and it hasn't. People didn't expect the market that we're in to be in the situation that we're in. Because many right now, which doesn't make any sense, but the trend is investors are moving their stakes to safer assets like bonds and gold and US dollar. The shift typically withdraws investment from more volatile areas like oil sector. Yet here the narrative diverges from the oil industry and remains lucrative. Okay. And so nobody was expecting oil to be where it is today. Everyone expected oil prices to drop and go to the safer areas. Okay. So I'm going to look at a few charts here. So I want to show you two charts. Okay. I'm going to compare oil to inflation. And I'm also going to compare oil to U.S. production, okay? So as you can see here, in black, that's the price of a barrel of crude, TI, okay? And as you can see here, in 2008, we hit highs of $140 a barrel, okay? And as you can see here, the inflation rate was 4.6, okay, in green, okay? Now, as you can see here, for instance, this is an easy place to see it right here. Oil prices dropped, and then inflation follows. Oil prices go up and inflation follows, okay? And so as you can see here, the oil price follows inflation, okay? The higher oil prices go, the higher inflation, which is why the media, which is why the left does everything they can, like bleeding out our SPR, like begging Saudi Arabia to do certain things for them. This is why they are seeking a ceasefire with Israel and seeking a ceasefire with Ukraine and Russia, because it greatly impacts the price of a barrel of crude. And the price of a barrel of crude has the greatest impact on inflation, okay? Now, here's something you have to understand about inflation, okay? In America, our currency is the most widely traded currency in the world. Inflation for us doesn't compare to what countries have dealt with. For instance, in Libya, bread was $5 a loaf, and then it went to 50 overnight, okay? That happens to many countries. It happens over and over again. They have a fiat currency, and then it crashes. And that's happened over and over again. But America's been going for 250 years strong, because the deal we made with Richard Kissinger, and every barrel of oil sold was sold in U.S. currency, making our currency the most powerful currency in the world. But all these other countries, their inflation goes up, their dollar goes up and down. But the stronger the U.S. dollar is, the more expensive the barrel of crude is, because they have to trade their dollars for U.S. dollars, and then they use those U.S. dollars to buy oil. So they're getting hit hard because of inflation, where we're trading our dollars directly for oil, because our SWIFT system is USD, the system that most trades are being done on. So everyone else is paying a lot more money for oil than we are. We don't know what it's like to trade our dollars for other currencies to buy oil, making it the most cheap, abundant energy for us, making our country the most powerful country in the world, where these other countries are left holding the bag of American debt, where they're having to pay for it, okay? Now, the less powerful the U.S. dollar is, the more powerful their dollars are, because they are trading less of their dollars for the greenback to buy oil. But BRICs is setting up in a way to where they bypass the U.S. dollar system, where they can buy it directly, saving them on the exchange. And when you do that, it makes oil and energy cheaper, thus increasing the demand for oil, okay? And so if you look at the surging demand in developing economies, Asia's growing consumption, increasing oil imports by country like China, which rose 5.45%. So the growth, a lot of that has to do with the fact that they could buy oil cheaper, bypassing the USD, okay? So demand is increasing. Now, we're going to start, this is what I believe we're going to start seeing, okay? If you look at the national debt, we went from $3.2 trillion in 1990 to $33 trillion in 2023, and today we're at almost $35 trillion. That's almost a $2 trillion jump in just 1 year, when in 1990, we were at 3.2 trillion. I mean, there was a time, from 1990 to 1991, we went from 3.2 trillion to 3.6. Okay. That's a difference of $400 million of debt. We increased from 33 trillion to 35 trillion in 1 year. The level of growth of debt is increasing substantially. Now, here's what I'm telling you. Here's what you have to understand. The more debt we have, the less valuable our dollar becomes. The power of the USD greatly impacts the price of a barrel of crude. The more powerful the stronger our dollar is, the more expensive to buy crude in the Middle East, because they're trading their dollars for US dollars. And the cheaper it makes it for us, because that controls the demand. If oil prices went to let's say that oil prices went to $50 a barrel for the Middle East, but it went to $150 for America. American demand for oil would drop, and Middle Eastern demand for oil would increase. Would it not? Well, right now, that's the way it's been over the last 100 years, because they're having to use U.S. currency. We pay the cheapest amount per barrel of crude because we're not having to convert our currency to other dollars. We've been paying the cheapest price for oil our entire lives. In addition to that, we get to sanction the very people that have made that possible, like Saudi Arabia, the people that sell oil. They're tired of that. They hate the system, and they want it off their backs, and they're going to do whatever it takes, which is why they formulated BRICs. BRICs is set up in a way to where they're in control of their own destiny at that point. They can't be sanctioned for a system if they don't use it. The only thing America can do is we could sanction them from using the US dollar and the SWIFT system. But if they don't use that system, we can't sanction them anymore. And our only option is to send tanks in. But we can't do that anymore. Why? Because we have $35 trillion worth of debt. If we add another war, it will destroy our dollar. So here's what BRICS is doing. This is their plan. Their plan is to reduce the amount of US dollar dependence. And when that happens, US dollar is going to start to weaken for the very first time. And when that weakens, the tables are going to turn. Oil prices, when they're at 100, are going to feel like $50 in the Middle East, and they're going to feel like 150 here in the US for the very first time. Because our dollar, you don't know what it's like to be in another country, having to peg your currency to a foreign currency. You don't know what it's like to buy bread with a foreign currency or a nation's currency where it's not widely traded across the globe like US dollar. We are spoiled Americans. And so what I'm saying is your US dollar in your bank account is going to be worthless, which is why gold prices have gone up tremendously. But the price of a barrel of crude has yet to be greatly impacted by inflation, because oil, the US dollar is called the petrodollar. The barrel of oil is traded in US dollars. So we don't see the impact like the rest of the world sees. That's why Saudi Arabia is very wealthy, because they sell their oil in US dollar. That's why Russia's very wealthy, because they sell oil. That's why Iran is very wealthy, because they sell oil. But you look at India and China, they hemorrhage every time they have to buy a lot of oil because it's very expensive for them. And so for the very first time, we're going to start seeing a decline. I don't know when. It could be because we're at $35 trillion worth of debt, and it's only getting worse. It's only going to get worse. And our GDP matches our current debt. But what's going to happen when our GDP is outmatched by our debt? You're going to see a weakening USD. And for the very first time, you're going to see oil prices greatly impacted, and you're going to have to trade more greenbacks for that oil, no different than gold. I truly believe that oil is a safe haven for USD, because oil is a globally traded asset. Oil is a needed asset in order to fund wars, and it's also needed to fuel wars. In Russia, Saudi Arabia, UAE, Iran, all of the Middle East, they are in control right now. And they're going to do whatever it takes to keep the price of a barrel of crude up. Otherwise, they'll bankrupt themselves. Who would cut off the very hand that feeds them? Oil feeds them. Oil is more important to them than anything else. where America has thrown out their oil, where America has sanctioned their oil producers, where America builds satellites to reduce the amount of oil output, where America puts more ridiculous hoops that you have to jump through just to get permits. I know this for a fact. We've dealt with it in New York. It's difficult. We're getting permits, no problem, but it's more expensive and you have to jump through even more hoops than you had to do before. The infrastructure in Texas is at 85% capacity and growing. At some point, what are they going to do when they run out of capacity? And there's many wells offline simply because you got these satellites saying that they're emitting natural gas and they're getting hit with these massive fees. So with inflation, with the oil negative sentiment, with the the woke agenda, with BRICs, with the Middle East working together, and something you have to understand. I haven't had a chance to really study this article, okay? But U.S. leverages Saudi-Israeli relations to isolate Iran. The U.S. seeks to enhance Saudi Arabia's deterrence capabilities through a defense pact while leveraging Saudi-Israeli normalization. Saudi Arabia views normalization with Israel as a means to extract security commitments from the U.S. and assert leadership in the Muslim world. Iran opposes Arab normalization with Israel and criticizes efforts by Saudi Arabia while Riyadh aims for both containment and engagement with Iran. Okay. And so here's something you have to understand. Iran is going to retaliate to Saudi Arabia. There's no doubt. In 2019, Iran Houthi rebels dropped bombs on key oil facilities in Saudi Arabia. Saudi Arabia has sided with Israel, has sided with America on this, and Iran doesn't like it. And so if you don't think that they aren't going to do something to retaliate, I mean, why wouldn't they? Number one, this is a slap to Iran's face, and it's an embarrassment to them that their neighboring country would do this to them. And number two, one bomb in Saudi Arabia, oil prices go to level and in making Iran even more rich. It's a win-win for these guys, but it's a religion for Iran. They have different religions. I mean, it's a different kind of Islam. So they have different religious beliefs. They are at war. And I think this is the quiet before the storm. I truly believe that the Middle East has yet to see the full-scale attacks that we're seeing in Ukraine and Russia. And I think it's only going to get even messier, guys. And so oil prices are very low in comparison to where they could go. And I truly believe that if with recession fears, with all the negative sentiment that you're hearing, and oil still at $80 a barrel, you got to ask yourself, if oil prices aren't dropping, even though there's so much negative sentiment towards oil, so much negative sentiment towards the American economy, and oil's at over $80 a barrel, you got to ask yourself, what's going to happen when the Middle East erupts with war even more than they are now? What's going to happen when Russia reacts to the movements of America, when Iran reacts to the movements of Saudi Arabia? And so I truly believe that your U.S. dollars are a sitting duck for inflation. And so I think gold is a good inflationary proof metal. The gold prices are already at very high levels. And can they go up higher? Yeah, sure. Of course they can. But it's a non-working material where oil is. It's a demanded asset and global commodity. And so when you buy an oil well, oil flows out of the ground, and the price of a barrel of crude, when it comes out of the ground, is sold for current prices. And I truly believe that down the road, that price of a barrel of crude will be greatly impacted by inflation, and the less valuable USD becomes, the more valuable that oil will be, okay? And so your dollars will not inflate when they are coming out of the ground as oil. Okay. Anyways, if you're interested in learning more about understanding what I mean by all those things, look at my description below, look in the comment section. Love to connect with you. Love to chat with you. Please subscribe to my channel if you enjoy these videos, and we'll talk soon. Thanks.